What is going on? It is Solo E in the building, and we just gonna get straight to it. We're gonna talk about how to actually trade with liquidity. If y'all didn't know what it is, y'all gonna know today, because like I said, man, we gonna talk about liquidity graphs today. If you know support and resistance, you know liquidity. Let's talk about it.
Keep it loaded, most certainly. Yeah, I get it loaded. You should ride the way. If you ride the way, shawty ride the way.
All right, so understanding liquidity. Liquidity refers to how active a market is. It is determined by the amount of traders trading and the total volume they're trading. So in other words, what is basically liquidity? It is referred to a high and a low. If you already know what support and resistance is, that is liquidity. Like I mentioned, liquidity is just a simple high and a simple low. Let's talk about it a little bit more in the markets. So like I said, every high and every low, every high and every low is a liquidity pool. Let's break liquidity pools more further down. So central banks, algorithms, institutionals is what's actually moving the market. So what they actually see from every high and every low, which we all know as support and resistance, is money. They know logically, hey, there's money left in these highs and these lows, and they're going to find a way to get to their money. So when you guys trade support and resistance, for instance, we have resistance at the top, support at the bottom. Let's say that we know this market just went up and we know this market went down. The best way to find support and resistance, or in other words, the best way to find a high and a low, is simply by seeing a green candle and a red candle, or a red candle and a green candle. That is what we call a settlement in a market. That creates a foundation in a market where we can now consider support or resistance, or also, in other terms, a high and a low. So once we see that high and a low, we wait for market to come down. So if we're looking at this as far as resistance, we know this market came down. So now our opinion and what we want to see is market to head back to that actual resistance. Now, typically what happens is traders will trade right when it hits here, or they might have an actual limit sell limit order. So let's say that you were the one to actually put a limit sell order roughly right around here, and your stop loss was maybe 10 pips out. What end up happening is price bounces from that resistance, and yes, it will give you that clarification that, oh, I see that now it's going down, but then right away, immediately price will break out of that. And once it does, price will then shoot down. This is what we call liquidity grab. So what banks are doing is actually coming in that pool, grabbing all of that money out, and then they moving it back to where it's supposed to originally go. So now that is exactly what is actually happening. So if we, let's say, kind of stop thinking about support and resistance and understanding it a little bit better, this is what we should be doing. I want you guys to take every liquidity pool area, which is seen as in high and low. If you cannot find a high and low, take a red candle and a green candle. That is your high. Or take a green candle and a red candle. That's your low. Or vice versa. Once you guys see that, you now have a liquidity pool area that you want to pay attention to. All of these liquidity pools has to actually be met at some point. We don't know when, but it has to be met at some point. So this is what we're going to do. Every time we notice market is coming from an up move to go down, which is a downtrend, we want to mark out all of our lows known as supports. We want to mark all of our support levels. As we mark these support levels, these are our liquidity areas. What is going to happen is the banks, central banks, big institutionals are going to come in the market, grab that liquidity, which is the pool of money, the pool of money, the pool of money, and then they're going to now officially go up. And then they're just going to do it again. Grab some liquidity, and then go up. Come back down, grab some liquidity, and then go up. It happens seconds and seconds. They're even grabbing liquidity at the top part because everybody thinks it's going down. So they're grabbing liquidity everywhere. Now that you guys understand how the basic concept is of liquidity is being grabbed, we're now going to simply look at this in a live market. So as you guys see here, we have a bunch of liquidity zones. Now here is the tricky part. This is where support and resistance becomes very complicated, Or this is where supply demand becomes very complicated. Or this is where anybody that trades zones might look at it and might become complicated from this because they don't understand which level it can actually hit to go back in their favor. So what we're going to simply do is every liquidity area, we're going to wait for 2 moves to happen before it goes up. So if we remove all of these for a second and just focus on this, because the reason on why we're focusing on this is if we rewind this and replay this, we have liquidity areas, liquidity area here and liquidity area here. We want to see which level banks will actually head in our favor. So like I said, once market breaks this liquidity, and how it would do that is we must see a wick go down. So we must see that first wick go down. Once we get that wick, we must see a previous move that created a settlement. Guys, remember when I said a settlement is either when you see a red candle or a green candle or a green candle or a red candle. Mine are blue and black. So if you pay attention here, this is what we call a low. Why is this a low? Because we have a black candle, which is seen as a red candle, and we have a blue candle, or which is seen as a green candle. So we have what we call one move that went from down to up, back down. And that is this right here. Now that we've seen that, we look for liquidity. The liquidity is this other remaining low. So now that we got this remaining low here, we finally wait for market to actually break out of that liquidity. It has to break out. It can be 1, 2, 3, 4, 5, 10 pips. I don't care. It just has to break out. Why is this? Because everybody has their simple resistance or support, or they have a limit order here for buys, and their stop loss is probably right here, and then they're ready to buy it, but they get stopped out. Well, as they get stopped out, that money goes to somebody else. That money goes to the banks. Algorithms, really, they don't take the money, but it goes to the big banks, the big institutions, and so forth. That's how we're going to look at it. Now, once that happens, I want you guys to identify. Remember how I said that we have to have 2 moves before we buy it or sell it. Remember this move that I mentioned earlier. Once you see that move, I want you guys to visualize a line right there. Once that line breaks, you then get ready to get in for a buy. And then now you can take it to the next liquidity areas, which can obviously be here and even be all the way up here. And that's exactly what we're going to do. Wait, before we continue, I want to actually talk to you about today's sponsor, Margex. See, here's the thing. A lot of traders lose money when market is obviously falling. Well, there's actually a way for you guys to trade crypto to another level. Of course, a lot of you guys already know this for my Forex traders. Let's say that you want to trade when the market is going down. You can absolutely do that. You can obviously even make money when the market is even going up. Well, with Margex, they actually bring you a way for you guys to trade crypto with up to 100x. And it's very simple on how the process works. Let me show you how the back end looks. Now, when you guys decide to sign up, Margex is actually going to give you a $100 bonus just for signing up using my code SOLO100. So when you guys decide to go on the platform, which only takes minutes to sign up, you can go straight to wallet. Right when you guys come to wallet, you will want to go ahead and hit deposit and select use promo code. Make sure that promo code is SOLO100. Once that is deposited in the actual system, hey, y'all can come straight to trade and you guys can go ahead and start trading right away. The nice thing I love about Margex is everything is integrated in Margex. You don't have to go on the third-party app or third-party website to look for the trade, and sometimes the trades will even be off from the actual broker you're using. Guys, Margex has everything integrated. TradingView is integrated here. You're actually able to do everything TradingView is able to do as well. Here's another nice thing about Margex. You come over here on your left-hand side, you see that you have your leverage. Now, this is very simple. You can actually change this within seconds. Let's say maybe you don't want to X 100 on your account. You can even go all the way down to X 50 to X 20 to even go further down to 5. Now, they do have another cool feature where you're actually able to choose between cross margin or isolated margin for whatever type of trader you are. Now, what cross margin is basically whatever you have for your balance, that is what you're actually able to use. So it's pretty much a way for you to say, hey, I'm gonna just go ahead and just use up all my money to actually access this account, and you can go with that. Otherwise, you can isolate it by creating your own leverage, which could be 100, 5, so forth and so forth. Now, once again, if you guys want an easy, reliable way to actually just trade crypto, Margex is where it's at. Use the link down below so you can sign up. Now, let's just get straight to the fire gems. So as you guys see, what ended up happening was candle immediately shot up. and this happens. Just because this happens doesn't give you the reason, or I shouldn't take the trade. I want you to enter in this trade, and then we can now ride it to this liquidity area. Now, the reason why we are confident in taking this trade even further up is because we established on a higher scale that market broke out of structure, which created what we call a new higher high. This was a previous higher high known as an HH, and now this became our new higher high. This became our new higher high. So we have to think of every time market breaks, we have to continue going up, and going up. So this is why we want to enter here and then take a TP here. And then if you guys was to simply do that, these are the type of reactions you can see. Now, if you guys liking what you're seeing, make sure you subscribe to my YouTube channel. Also make sure you follow me on Instagram, because like I said, guys, we are dropping gems non-stop. But as y'all see, market just went up and it is now creating a new high. Like I said, every time you see a green candle or a red candle, that is a liquidity area or seen as support and resistance. So this can go on and go on and go on. Now, if you guys love this type of videos, make sure you like and comment down below. I want more Forex trading videos like this. I will definitely make sure I drop as much as I can for my beginners and even intermediate people that has been trading for a long time or understands this already. Like I said, guys, make sure you subscribe to my YouTube channel. Make sure you follow me as well. Like I said, I'm Solo E. I'm a musician. I do music. I sing. I rap, produce. Of course, I trade. This is where I make my bread and butter to invest into my music career. So y'all can obviously listen to the tune. So man, just make sure you guys support your boy, check everything out. And other than that, guys, like I said, subscribe to your boy. I will see you guys in my next video. Your boy Solo. Peace.